afternoon or good morning to all of you, the many of you who are attending our expert forum today on business interruption insurance in the context of low-income MSMEs and COVID-19. We're really happy that we've been able to bring this to you and also open it to those of you who aren't members. We feel this is an incredibly important topic right now. It was arising as a topic and a theme in any event. And we're very glad to have our experts with us today. So I'll be introducing them shortly. If we could just, just bear with me a second. I'd like to move to the next slide, please. And just go through some housekeeping items. So we'll keep the discussion to an hour as we usually do, and that includes the Q&A. So we'll, after a brief overview of business interruption insurance, we're going to be hearing from our two experts, Siani Malama from Hollard Insurance and Carlos Boelsterli from Micro. We would ask you, in order to ensure good sound quality, that you please keep yourselves muted, well, we will be muting you. You also can you can submit questions if you haven't submitted them previously using the Q&A feature on the screen. If you're not familiar with the Zoom webinar platform and you can't find the Q&A feature, please contact the MIN executive team using the chat. You can also use the raise hand icon should you wish to speak. We would just ask you to lower your hand and mute yourselves again after you have spoken. I'd also like to confirm that slides and a recording of this presentation will be circulated later, and any questions left unanswered we will endeavour to answer by email. And thanks again to those of you who have already submitted questions. That's very helpful, and we hope that those will be addressed during today's webinar. Right, now I'd like to introduce you to Siani Malama of Hollard Insurance, who will be known to many of you. He is Head of Business Development, Marketing and Microinsurance based in Zambia. Specifically in Lusaka, and the objective of his current role is to establish and provide inclusive insurance solutions for the underserved markets in Zambia, for Hollard Zambia, mainly targeting micro-entrepreneurs, as well as small and medium enterprises and low-income households. Siani is passionate about inclusive insurance, and he's been exploring opportunities in this market segment for a long time. And is very keen to see solutions be developed to enable greater resilience in the near future when risks occur. We're also very fortunate to have Carlos Boelsterli with us. Carlos will be known to many of you as well. He is CEO of the Microinsurance Catastrophe Risk Organization, better known as Micro. And comes to us originally from Bern University, after which he worked with Swiss Re and Zurich for many years in Switzerland and then in Latin America. So without further ado, I'd like to proceed with a brief overview of business interruption insurance, which is a traditional form of insurance, as you're aware. But has been gaining a fair amount of press recently. So there are a few things that I would like to point out. One is that traditional business interruption insurance covers the actual loss of business income for a period of time, which is referred to as the period of restoration. Typically, the business interruption must be caused by physical loss or damage to property that is due to a risk specified in the insurance policy. Now, recently, there has been some innovation in this field, which is taking account of disruption that is caused by cyber risk, digital supply chains, or even civil unrest. But that's by no means widespread yet. The other thing is that usually business interruption insurance is offered as an add-on to standard buildings and contents insurance policies. Now, let's focus a little bit, because this is quite important, on what is really meant by actual loss, business income, and the period of restoration. The actual loss refers, of course, to the loss that is sustained in actual fact, right? And that means that insurers need to be able to estimate the maximum probable loss, or the value at risk, so that they can price the cost of carrying that risk. Therefore, it's in their interests to quantify that risk and specify the covered risk or set of risks as carefully as possible, or the insurance would become unaffordable. Or in the situation that we're currently seeing, insurers could face the type of a degree of financial exposure that would be dangerous and difficult to quantify. Businesses, on the other hand, have the responsibility of trying to put a number on what the interruption would cost them. And this has particular implications for MSMEs and particularly those operating in the informal sector, since this would include their estimated loss of income and normal operating costs, which typically do include payroll or salary payments during the period of shutdown or interruption. The cost of the premium also obviously depends on the duration of the cover, this period of restoration, which is the estimate of how long it would take them to get up and running again. So it's easier to see what this might represent in the case of fire or theft than it is in the face of shutdowns such as the one that we're all currently facing. Now, I would also like to emphasize that even in wealthier countries that have a well-established insurance sector, SMEs, not just MSMEs, but SMEs are unlikely to have any business interruption insurance at all, even though they acknowledge that recovering from a disaster could take as much as 3 months, and ultimately many of these small businesses that do have a disaster without insurance end up failing. It's also worth noting that there's not a lot of data around on how many SMEs in wealthy countries have any form of business insurance. This is a reality that recently led the California Insurance Commissioner to oblige the state's insurers to provide data in an unprecedented way, which was part of their effort to manage the fallout of the current lockdown. So generally speaking, SMEs are significantly underinsured, and this extends beyond business interruption insurance. Despite this, they're the backbone of many economies, and this creates a systemic weakness that absolutely needs to be addressed. Now, what about MSMEs in the South, which is our main focus of interest here today? Whether they're formal or informal, MSMEs play a crucial role, but access to insurance is minimal. So moving from left to right, you can see that in Mexico, there are 4 million SMEs, of which 97% are micro, and they employ nearly half of the workforce. Similarly, in Brazil, nearly all of the formally registered companies are MSMEs. In the Philippines, 88% of the 1 million MSMEs are micro, not SMEs, but micro businesses. And in India, there are as many as 63 million of these companies that are registered. I do mention, when I say registered, of course, that's in the formal sector. The estimate for South Africa is that 2 out of every 3 SMEs, of which there are just over 2 million, are informal businesses. And in Zambia, there are an estimated 1.2 MSMEs who employ as much as 70% of the workforce. And this is a good point to hand over to my colleague, Siani, who is going to be talking to us about microinsurance for MSMEs, specifically looking at business interruption in Zambia. Over to you, Siani.
Thank you, Catherine, and a good day to everybody that has joined. I'm just going to give a quick overview in terms of the work that that we've been doing in Zambia in the macro and particular focus on MSMEs and trying to find solutions for this market segment that that still remains very much underserved by the financial the financial sector. The Zambian landscape is fairly interesting in terms of the type of businesses that operate. How we've gone about it from a Hollard Insurance Zambia perspective is mainly to look at five categories. We call it the 5C model. One is obviously the consumer is at the center of everything that we're doing. Then we look at the category, what channel, how do we distribute these products. We look at the competitive landscape and the company. And this has really brought a lot of insights from the research that we've done. You can see just some of the stats here. There's about estimated 6 million emerging consumers in Zambia, and less than 1% of these consumers are making use of a formal insurance solution. We've seen an uptake, an increase in the mobile penetration. So digital definitely presents an opportunity there in terms of scale, in terms of reducing the distribution costs, so that the product remains accessible and affordable for the target consumers who are very price driven and price sensitive. Financial inclusion is also on the upward trend. And insurance penetration at the moment, if we look at the industry at whole, to GDP is still less than 3% in terms of penetration. Our research also indicates to us that about 57% of low-income households actually make use of some form of saving when faced with the calamity that has happened. So you can see that people do have a sense of some form of insurance, whether it's formal or informal. In most cases, what we found is it's a very informal structure. And that's how these consumers and SMEs are actually coping with risks that they face on a day-to-day basis. Majority of the MSMEs in Zambia are employed in the agriculture sector. We're seeing the Zambian government is driving agriculture next to mining as a second biggest sector that they're trying to evolve. So we've seen a lot of small scale farmers coming through in that space. But again, the informal segment is very much largely uninsured. And we can see that any risk has got a catastrophic impact on the livelihoods and income generating capabilities of micro entrepreneurs in Zambia. Kathy mentioned earlier in introduction, we estimate there's probably about 1.4 million micro entrepreneurs in Zambia, employing approximately 70% of the labor force. So this just gives an indication of how critical and how vital these small businesses are for the economy, and what they do and how they create employment. Yet the financial sector still does not cater for the needs of this market segment. We've seen in the market at the moment very few products that actually address the business owners. In the life space, we've seen Simple Life, we've seen Simple Funeral, but properties or insurance solutions for the actual business are very few or non-existent from a Zambia perspective. Just to give you an idea of the type of persona or the type of business owner, a micro business owner in Zambia, our research indicates, small businesses, these guys own probably between 2 and 3 micro businesses that they operate. So they've got one main business, but running an additional second or third business. The income ranges between $350 to $1,200 on the upper end for total income from other businesses that they operate. We found also that most of these micro entrepreneurs are in the fast-moving consumer space. So stock is a big asset for the business owners, and on average, their stock values is normally run about $3,500 that they trade in terms of stock. Some of the financial and business challenges that they face, not everything has got an insurance solution, but for us it was very important to understand the financial problems or challenges that they face, both in a personal capacity as well from a business perspective. And you can see there that, for example, lack of access to affordable finance is a big challenge. Operating costs, business operating costs in Zambia is a huge challenge. The fluctuating exchange currency rate with local currency to the dollar. It's also, it's one of the biggest factors. Yet this is a financial challenge. It doesn't necessarily mean that there's an insurance solution for it, but for us it was important to understand all the financial challenges to see where we could co-create the possible solutions. On the right-hand side, it just gives you an indication of what the expense priority are, and you can see a huge chunk of their income is spent on family. 20% goes back into the business, and the balance of it is spread according to what the other priorities are in terms of savings, social spend, school fees, education, etc. Just to give you an example of a product we're currently designing with our insurer tech partner, Inclusivity Solutions. This is a property assistance product targeting purely micro entrepreneurs, like I mentioned earlier. That's got a business interruption cover to it. The way the product is designed, it's got a maximum payout of about $500 that will pay out in the event of storm damage or fire to the business. But we didn't want to stop there, because we know that if a business gets damaged, there's definitely that loss of income that follows to it. And what we trying to a solution for now, especially with COVID-19 that has happened, is how can we enhance that product offering where business interruption or loss of income cover comes in? How do we get cash quickly into the hands of entrepreneurs so that we can cushion that blow that they face without physical damage to the actual business. So some of the thoughts that are going around that we're busy designing is on your far left, or my far left, that little graph that shows the number of weeks and the payouts. So for example, if a business is inoperable for a week, there's a $50 payout. If it's 2 weeks, it's $75. 3 weeks, $100. For a full month, we're looking at paying about $125. Again, the biggest challenge with designing and trying to find solutions for this market segment is data. Lack of data is a huge challenge. I think from a global perspective, it's even a bigger challenge in Zambia, in that majority of micro entrepreneurs do not have formal financial record keeping. These guys trade on a day-to-day basis. They live on a day-to-day basis. It's very difficult for them to differentiate between business income and personal income. We find probably about 75 to 80% of the micro entrepreneurs do not own a bank account. Majority of them make use of mobile money wallets. And that mobile money wallet is used for personal expenses, it's used for personal income, it's used for business. So it's very, very difficult to really price properly. So we have to make a few assumptions based on the data that we have. Just to sort of just close off in the next minute or two, what we put ourselves on is to really sort of have a 3 to 5 year journey map forward. One, looking at our pilot, because we want to learn first before we can fully scale it up, and then going to a scale, and then hopefully within the next 4 to 5 years that the program becomes sustainable. What's key for us was the customer segmentation that we were focusing on, which is primarily micro entrepreneurs, substance farmers. These are your small scale farmers. We look at the product categories. Bundling of the product is quite key. As I mentioned, micro entrepreneurs, it's very difficult for them to differentiate or disconnect between the personal risks and personal expenses with business. So we're looking at bundling as solutions, and then the biggest aspect of it, which is distribution. How do we effectively distribute these products in a cost-effective way? Making use of digital. We saw earlier on in the slide, Zambia has got about 89%. Mobile penetration, so we definitely relying on the use of digital capabilities to distribute products in order for us to reach scale, and also just from an efficiency and a cost reduction aspect. We're also mindful though that a high mobile penetration does not necessarily mean digital capabilities for this market segment. So there's definitely still that element of a human touch that is needed. We know trust is a huge barrier for micro entrepreneurs and financial institutions. So we had to definitely develop a pilot and monitoring framework to see where it is that we need to make changes, where do we need to fix, and how do we refine the customer insights and solutions to ensure that we're providing value for the customer. We're designing for solutions and not just looking at taking a product to market. I'd just like to end off in terms of what we're looking at, how we're going to achieve our ambition. Global statistics tells us there's about 2 billion informal people in informal employment globally. Zambia's got about 1.2 million. That gives us a good customer base to focus on. Product design and product development is going to be critical. It's going to be crucial. Definitely adopting a human-centered design approach through customer centricity is going to be quick for a solution for us in terms of addressing the needs and loss of income for the micro entrepreneurs. Distribution, again, partnerships. How do you leverage of existing partnership? How do you leverage of trusted brands within the communities that micro entrepreneurs are making use of in order for us to achieve our ambition. The ILO just recently released a report last week looking at the impact of C-19 and especially for micro entrepreneurs. And I think just to quote what Guy Ryder said, workers and businesses, we're definitely facing a huge catastrophe, and we're all looking for solutions. And the undeveloped economies are definitely going to be impacted. I think everybody is impacted by COVID-19 at the moment, but we know that vulnerable consumers, micro entrepreneurs are going to be far off, worse off. So the key is how do we now come together and definitely look at solutions that we can design to cater and provide some form of resilience for this market segment that is very, very critical for our economy. Thank you.
Siani, thank you so much. While we're handing over to Carlos, there's a question that's come in from Annette Houtkamer van Dam of Abisa, which you can probably just answer very quickly, which is it correct that this product is not yet available in Zambia? And if so, when will it be introduced? And how can this be seen as a solution in this COVID-19 period? If you could just briefly answer that while we hand over to Carlos. Thank you.
Thanks, Kathy. Correct. We have not yet released a product to the market. We are about to release it, touch wood, within the next 6 to 8 weeks. What we're doing at the moment is especially on the business interruption element, is we're looking at how do we enhance that offering to extend it beyond just physical damage. Because if you look at the business interruption policies, globally, majority of policies require physical damage to an asset, to the structure, but we're looking at it to say how can we enhance that product to offer a solution where businesses are forced to close temporarily from either a government directive where there's no actual physical damage to the business, but yet there's a payout that goes along with that.
Great. So without further ado, Carlos, I'd like to hand over to you so that we could hear what you have been rolling out in Latin America and the Caribbean. Thanks so much, Carlos.
Thank you, Katharine, and thank you also for the opportunity to share with all of you what we at Micro are doing, which is very much aligned with the topic of this WebEx. Allow me to start. Let me see if I can. Yeah, I can. Start with a few words about Micro. For those of you who haven't heard about Micro, Micro is a company. It was created in 2011, so right after the earthquake in Haiti. And it was created with a clear mission, namely to sustainably strengthen the resilience against natural disasters of the underserved, and do that by designing and implementing appealing and affordable and accessible insurance solutions. All of that easier said than done, since there are lots of contradictions in really being able to do all of those, well, to reach all those goals. The way we do it, it's in close collaboration with local partners. Local partners are mainly local insurers and aggregators who enable the distribution of our solutions to our target segment of the population. And through those local partners, Micro is currently offering its products in a few countries, in all of them in Latin America, namely in Guatemala, El Salvador, and Colombia. And right now in an expansion phase, going to 2-3 more countries within the next 2 years. So much to Micro. Now a bit to our solutions. As mentioned, they are the result of a close collaboration with local partners, and although adjusted to the specific needs of the beneficiaries, of course, in each of the countries and with each aggregator, they have some common features, and that's what this slide shows to us. So first, the insurable interest is the productive activity of the insured. That means the interest that they have for their productive activity not to be negatively impacted or completely interrupted by the occurrence of a covered peril, in our case, a natural disaster. Currently, we focus on 3 perils, namely drought, excess rain, and earthquake. The solutions, they cover indirect losses, a kind of a simplified business interruption, but I'll go a bit deeper into more detail in a second. These solutions are index-based, and that's done like that just to avoid unaffordable individual underwriting and loss adjusting processes. And the solutions, they are designed to trigger gradual payouts depending on the severity of the event. And this is how it works. Oops, sorry, I jumped one too much. Let me go back for a minute. Oops. Here we are. this is how it works. So we design indexes or indices that best possible capture the events that we want to cover. Currently, as I said, drought, excess rain, and earthquake, which were the most relevant insurable risks resulting from several demand studies that we did in the region. Then, when a disaster occurs, there is a calculation platform that continuously extracts data from those predetermined local and international data sources and compares that data against the parameters of the insurance policy. When a triggering event is detected by the calculation platform, it issues a loss report showing what happened, where did it happen, and the payout level corresponding to the severity of the event. That report with details as to percentage payouts per location goes to the insurer. The insurer, the local insurer, identifies the individual clients and their individual sums insured, applies the payout, and then proceeds to the payout. The client then gets informed via the usual communication channel that they have with the clients. It's usually, in the cases that we're working on, via a message, SMS. Now, as I said, with regards to the insurable interest, so natural hazards, like in our case, earthquake, drought, excess rain, they can cause direct or indirect losses. Direct losses would be material damages, like damages to housing, to crops, to merchandise, to any kind of assets. Indirect losses would be more like consequential losses, financial losses caused by an increase in expenses or a reduction in income due to the event that happened. So they affect the productive activity. What we at Micro are doing is more the lower part, so the insurable interest being the indirect losses, and we capture the impact on the productive activity with specifically designed indices so that there is no need for, once the modeling is done, which is a tremendous work that needs to be done before you even go to market, but once it's done and fine-tuned, validated, and so on, you can offer the product and don't have to go into individual underwriting, or when an event happens, you can pay out without having the individual loss adjustment processes. The advantages of those solutions are, of course, plenty. So the cover has no exclusion, so it's named perils. What you name in the policy is what is covered at the levels that are clearly there. Clients do not need to file a claim. The insurance triggers automatically. There is no paperwork needed to receive the payout after an event. There are no deductibles. There is no risk inspection, no loss adjustment, no moral hazard, since what is covered are events triggered by God's hand, so to speak. Payouts are agile due to the same reason. And this modality of insurance, of course, allows to expand the traditional insurability boundaries, which traditional products are often difficult to bring to the people who are in remote areas or for very low sums insured. And so by doing it with this modality, it expands the traditional insurability boundaries. Of course, it's not only advantages, and it's not a magic formula to solve all the problems, but it's a valid, very often first risk transfer instrument reaching to certain segments of the populations, which also has some shortcomings. One of the most known ones is, of course, the basis risk, since we're paying a modeled loss, not the actual loss. There is no loss adjustment. There might be discrepancies. That's called the basis risk, which can be positive or negative, and that requires very much to spend quite some time on the design of the index to minimize as much as possible that basis risk. Also, lots of efforts are needed to go into explaining your product, but I wouldn't say that it's much different than with traditional insurance products. When it comes to micro, we're very interested in making a conscious sale, so that we hopefully positively impact behaviors, and that requires a conscious sale. So we invest also a lot of resources into making sure that we have financial education materials that explain in a simple way what is covered and what isn't. That's in general terms what I wanted to share with you about the product. So Katharine, back to you.
Great, thank you, Carlos. Before we go into some of the questions that were raised previously, I would like to just raise a very quick question submitted by Shilpi from, I can see Shilpi, your question has been answered, so on the Q&A. So please, all of you, do keep an eye on the Q&A. The panelists will be answering those as they can while we're speaking. So without further ado, we're going to move on to our first main question, which is really addressed to Siani, but you mentioned that the level of business income for your entrepreneur that you profiled with the mom and pop store, the level of business income was around $1,200 monthly, with about $3,500 worth of stock at any given time. What would the premium likely to be under normal circumstances, so not under the current, rather unusual circumstances, to ensure that level of business income?
Yeah, Kathy, I think probably one of the biggest headaches that insurers have, especially our actuaries, is a lack of data, right, in terms of pricing these inclusive insurance products. I think it's a global challenge that micro entrepreneurs in particular do not have or do not keep data. But what we've done based on some of the assumptions and the models that we have come up with, we're looking at pricing this probably in the range of about $2 to $3 monthly premium for the property assistance product. We quite confident that our assumptions are close to accurate as possible. But I guess the best way to learn is to actually go to market and test it. So we're taking a learn and test approach with a price range of about $2 to $3.
Great, thank you. Thanks for that. So moving on to a second question, also quite a nitty-gritty question. Assuming that workers could be insured against business interruption for the monthly minimum wage, what would the premium for that cover likely be? And how would you as an insurer approach pricing such insurance?
That's for whom?
Oh, okay. So that's actually for both of you. And what we've got here is a slide showing what monthly wages look like for low-skilled workers in a selection of countries around the world. You can see there's quite a bit of variability. This is taken from a global database that collects this information. So in Zambia, the equivalent wage is about $89, as I mentioned previously. But how much would it cost for these levels of income? How much would it be likely to cost to protect the income of the workers?
Maybe a few comments from my side. I guess it would depend on what is it you would be protecting those incomes against. Right now, we're all talking about a pandemic, which of course poses additional challenges as to how to price that risk. There are already probabilistic models out there, actually products. I know about a couple mainly bought at a macro level, one of them being the World Bank, who 3-4 years ago bought something. So that just to say that there are already probabilistic models calculating or estimating how frequent and how severe those pandemics can be, which is the base to be able to talk about price of risk. And afterwards, it would of course depend on how the product is designed. So what's the sum insured? When do you want to start it triggering? And for how long a period you would like to have that person covered. I would like to think, I'm not an actuary, so I won't dare suggesting here any numbers, but if we talk about pandemics, I would like to think that even though it's something that has a potential to be very severe, as we're currently seeing with COVID-19, I hope, or I would like to think that it's not very frequent, so the risk premium should be something affordable. But again, not being an actuary and not a health expert, I rather don't come out with my wish price, which would be rather low.
And Siani, what's your take on this question?
Sorry, Kathy, if I can just ask you to repeat that question. I had lost a bit of connectivity there.
No problem. What is your take on this question? If you assumed that workers could be insured against business interruption for the monthly minimum wage, so this is the monthly minimum wage for a low-skilled worker in Zambia, what would the premium for that cover look like? And how would you approach pricing such an insurance?
Yeah, I think, Kath, you know, it's really very, very much driven by a few assumptions that you'd have to make at the pricing stage, right? Given the lack of data that is not available from a global perspective, at Zambia, it's a huge challenge. Data is a huge challenge, even in our traditional space. You know, so you definitely have to take an approach. I mean, the actuaries can definitely kill me for this, but you have to take quite a few assumptions to see what is the ability for the consumers to afford, and is what we propose in actually going to add value to the consumers to protect that minimum wage. And in my view, also this would also probably would need some form of conversation with government to see how we could make use of some of their resources in terms of pricing for this. So it's something that that can definitely be addressed through collaboration and partnership.
Thanks for that great answer, which brings me to the final question that we'd like to put on the table before moving on to the questions that were submitted previously. Now, less wealthy countries, you've just mentioned government support, less wealthy countries are unlikely to be in a position to provide income support using social security mechanisms. So how could insurers step in, and is it even feasible for private sector insurers to cover this type of risk? Perhaps if you could each provide your insights in turn, that would be great, starting with Carlos.
Okay. Well, now with an eye again on pandemics, you're right in that we're seeing there is a huge protection gap, which needs to be closed with what I would call top-down and bottom-up actions. By that, I mean solutions at different levels. Bottom down would be macro, the government or international organizations getting some additional protection so they can act with their ways to help the situation, but also bottom up, which is probably the more interesting piece for this discussion right now, which would be more micro level, making sure that the payouts get as direct as possible to the final beneficiaries. It is at least COVID is showing us that it's really catastrophic. That's nothing new to insurance companies. They're used to dealing with catastrophes like earthquakes, hurricanes, and different natural disasters. That's actually what micro does. This one brings an additional component where that catastrophe is not only of very severe, it's also global. So maybe there will be a time when we get to some capacity constraints where we have to limit the kind of coverage that can be given to individuals because the exposure is bigger than what insurance companies, even tapping into reinsurers' capital and capital markets capacities can handle. But not something I would worry about right now. Right now it's more designing the appropriate products, distributing them, and hopefully one day we get to a point where capacity becomes an issue.
Great answer. And Siani, could you perhaps provide your views on this?
Yeah, Kath, I think in my view, that there's probably a space that the insurers could play in that, through PPPs with government, where insurers could extend and provide the capacity for it. Obviously, this is quite a high risk for private sector and for private insurers. We're constantly looking at bottom line and returns. We've got pressure from the board, etc., in terms of producing numbers. I think it definitely takes a collaboration in terms of having proper PPPs in place, and where insurers could definitely provide some form of capacity to the existing funds that could be used in events where we have catastrophic events like what we're experiencing now with C-19.
Thank you for that. Now, this also raises another relevant question that has been submitted by Martina Widmeyer, and that is, how are insurers going to cope with excluding or not excluding events like Corona in the future?
Okay.
That's for Carlos.
Okay, I can jump in.
Sure.
Thank you. Well, I'm not sure where the question is coming from. If the idea is that it's something uninsurable, so it should be excluded, or on the contrary, how do we make sure it's not excluded so that people have coverage? But either way, I think it's quite good to have it very clear in whatever policy you have to really know if it's covered or not. And this kind of events will make sure that it's explicitly written and understood if it's covered or not. As it is an insurable interest, it can be modeled, the price can be calculated. I would, of course, be for having it explicitly included with, I don't know if on a standalone basis or if it needs to be with other covers that make sense for this kind of situations. But you will probably see that it will be explicitly either excluded or included in the future.
Okay, great. Now, related to the informal sector and business interruption, is a question from Rehat Kariuki in Nairobi, which is, Siani, if this is for you, whether there are any examples that you're aware of how insurance is providing solutions to the growing gig economy. In other words, people working for firms such as Uber or freelancing on 0-hour contracts.
Yeah, the freelancing space is a very interesting space in terms of the way they're perceived from an insurer. Wherein my insurer had, the perception is that these are high risk clients or customers to provide cover for. There's very few examples or currently where there are sort of like insurance solutions that are providing some form of loss of income for freelance workers, but there isn't much at the moment from a global experience that I've seen. It definitely does create an interesting space. It definitely does force insurers to think outside the box in terms of pricing risk and the perception of risk that we assume that freelance work is highly risk. But there is one or two that I have seen, but not much at the moment, I'm afraid.
Right. And a question from Monirul Hook from BRAC in Bangladesh. which is for Carlos, which is a question really about, where do we start? How can we start researching the loss pattern and the pain points? And would it be possible to set up regional alliances to work out or help each other overcome the pandemic shock? So obviously that's quite a broad question, but what do you think needs to be put in place for us to start taking this kind of action, knowing that already many people are actively looking at what to do and how to deal with the current situation?
Yeah. Well, it definitely is a problem that exceeds the capacities of any individual, be it from the public or private sector. It's very complex. It's impacting from different angles, and it clearly calls for collaboration at all levels. That's something we're already trying to do with what we do, in the sense that accessing very often for the first time this segment of the population, rather low income, vulnerable in remote areas, and so on, it's quite challenging. So if we manage to already reach out to them with a solution, we should make sure that that solution is as comprehensive as possible. And for sure, that's a call not just for one actor, but for all of those who can contribute to effectively address the needs of the population. When events like this one happen, those are moments where it becomes clearer. If not, it's something nice that you say, but it's very difficult to follow by actions. Right now, I think we have a conjunction that really highlights the importance of collaboration. So it's up to us to make sure that we come together, that we share experiences, that we innovate together, and make sure that we reach out where we need to. The protection gap is so huge. I mean, the insurance company in 300 years of existence, still the coverage it does is so low. So it's a really strong call to all of us who can contribute to come together. And well, maybe for the mean, an interesting role to get something going and make all those juices flow into something that makes sense for the beneficiaries.
Thanks, Carlos. And it's certainly a pillar that we are exploring more and more actively. And I'll come back to that with the final question. But before the final question, Siani, one last question for you, which comes to us from Juan Briceño in Venezuela, who would like to know how to make insurance policies attractive at this time, both for companies and users, given the prospect of economic recession. And I would note that a number of initiatives have been undertaken offering specific COVID-19 microinsurance that we've heard about through our LinkedIn chats. So Siani, what's your take on this? How to make insurance policies attractive at a time when both companies and users are going to be under strain, and where if you did offer protection against the risk of COVID-19, you are effectively trying to ensure a risk that is almost a certainty over the medium term.
Yeah, Kat, I think in insurance, especially for the low income segment, in my view, is they have to be more tangible, right? I mean, insurance purchase is always a grudge purchase, across all customer segments. Yet alone the low income segment that have got huge trust, where there's a huge trust barrier with financial institutions and insurance companies, and the reputation that insurers have. So from an insurance perspective, we definitely need to make products more tangible. Products definitely need to add more value to customers in a case of even if there isn't a payout that has been triggered, but there is some form of benefit that customer or the client does get to access from the product. And I think I mentioned in one of the slides earlier, that designing for value definitely has to be at the forefront of product design and development, and making insurance products more tangible going forward. In my view, is going to be very, very key.
Thank you so much. Now we've got 5 minutes or so left to go, and I'd like to ask you both to comment on a question that has been put by Bert Ochteberg from Microinsurance Master. Thank you very much, Bert. And Bert's question is, what can micro insurers do right now to help their clients cope with the effects of COVID-19? And perhaps you could speak not only to what they can do, but what many micro insurers and insurers are already doing and trying to put in place. Carlos, if you'd like to go first, that'll give Siani a couple of seconds to think it through. Yeah, thank you.
Okay, thank you for the seconds you didn't give me. No, well, a difficult question, because if you come from a more technical side, you cannot insure houses that are already burning. The basics are not there. So when we think about a product, it's probably think about the next pandemic to be better prepared. Maybe for this one, there are some products that can still be offered where the numbers still work, like, I don't know, funeral expenses to still sell it. Probably the odds would still work out so that it can be distributed in a technically sound manner. Otherwise, I think it's very much how many funds do you have to alleviate the pain of others, but without looking so much for technical support, be it own funds. There are lots of big firms, Swiss Re being one of those. Only yesterday they came out with a big number that they are going to distribute to alleviate that. Or to distribute, maybe being used as a distribution channel for funds that are being given to alleviate the pain. So they can use those funds to finance the premium so that people are not there without coverage or things like that. But to post-event cover something for which you didn't collect the right premium, well, it wouldn't be technically sound.
Thanks, Carlos. And Siani, what's your take?
I think, Kathy, you know, from an insurer perspective, you know, micro entrepreneurs, low-income consumers, at the moment, especially those that are not trading, you know, these guys trade on a day-to-day basis, right? I mean, they don't look at, you know, end of the month in terms of, okay, this is how much income I've generated. They live on a day-to-day basis, so they need cash in their hands quite quickly. And I think there's definitely a need, more need for partnerships and collaboration, especially with our microfinance institutions, where insurance can form part of some form of like emergency fund that is available, where micro entrepreneurs can access funds or get access to funds quite easier, and there's an insurance component that is attached that comes to that. I don't think insurers are able to do it on their own. In my opinion, there's definitely a need for greater collaboration within the financial value chain, especially with financial institutions, in the event of microfinance institutions that are more in the forefront in terms of micro entrepreneurs are getting access to funds, and then incorporating insurance as part of those such solutions.
Thanks so much. Now, I'd like to just mention one comment that has been made on the Q&A by Sarah Ibrahimi, who writes, I would argue that now more than ever, the value of insurance and the need for a safety net is more salient than ever. Through communication and connecting with customers, coming out of this, insurers should be able to more easily convey the value of having policies. So I'd like to leave with this thought that insurance is about more than payoffs. There certainly is a role that can be played through messaging and support and clear communication. And I would really like to leave you with that thought. I'd also like to thank our participants as well as our panelists today. and remind you that we will be answering all of the Q&As after the webinar. And also remind you that we're very glad to have had such fantastic participation in this webinar today. Normally, these webinars are open to MIN members only. But if you are interested in finding out more about joining us and participating in webinars like this in the future, please do send us an email to info@microinsurancenetwork.org. We organize these forums on a regular basis, and we're very, very glad that you've all been able to participate today. Thanks, special thanks also to Carlos and Siani, whose willingness and flexibility and thoughtfulness has provided us with such interesting material today, and to my colleagues Azier and Hugo, who in the background have made this technologically possible. Thanks to all of you, and we look forward to seeing you soon. Do take care, be safe, and be well.
Thank you all.